OPEC Plus closing in on a deal to cut output by 2 million barrels a day, drawing pushback from Washington as Democrats look to tame pump prices going into the midterms. Bloomberg's Julian now in London alongside Annmarie down in DC for more. Let's get to you, Julian. Just what on earth is happening in Vienna?
Well, I think what it is producers don't like the way the oil market is looking and the way that it's moving. They were very concerned by oil prices below $80 a barrel. They want something that's much closer to $100, and they're acting to get it. The one thing that I would point out is that this 2 million barrel a day headline cut is in their target. It's a cut in the target. The actual reduction in production that will probably lead to is much closer to 880, 900,000 barrels a day, because so many of them are well short of their target levels anyway.
Annmarie, do you think that brings any comfort to the White House?
Well, that's exactly what does bring comfort to the White House, Jonathan, the fact that this isn't 2 million barrels a day coming off the physical market, which means there could be a spike in the price, but potentially then it'll settle down, which is why I'd say the White House is not so much in panic mode, but they're probably a bit annoyed at the fact that the optics of this and the timing is not ideal at all. So when you look at the timing of this, in 5 weeks from now, Jonathan, you're going to be sitting next to me here in Washington, D.C. We're going to be talking about the midterm elections and potentially what many would call referendum on the presidency. This does not bode well for the White House 5 weeks out from the midterm elections. And on top of that, the optics of this are also discouraging for the administration, with the fact that you have a newly sanctioned Russian official. He is the head of OPEC Plus diplomacy out of Russia, the Deputy Prime Minister, Alexander Novak, physically in Vienna. He'll be sitting side by side with Prince Abdulaziz, which arguably the Saudis are the United States' strongest ally in the Gulf. So the timing and the optics of it is what is very discouraging for this White House, not so much that potentially this might not move the market.
Julian, options. One option on the table, and it's been talked about in the press for a long time, several reports over the last several months on this, and the Energy Secretary has not exactly batted them away. Exploring maybe restricting, constraining the ability for US companies to export crude product. Julian, what do you make of that?
I think it's a terribly bad idea, not just for the US. I mean, it's a bad idea globally. I think it will create real problems in Europe, and I don't think it will solve any of the problems that the US administration is trying to solve. I mean, you know, look at crude oil prices when there was a ban on crude oil exports. West Texas Intermediate followed Brent, not in lockstep, but very, very closely. There was no real difference between crude oil prices in the US and crude oil prices elsewhere, and I think you'll see exactly the same with refined products. But what this will do is it will disrupt the flow of the market, and that has to be bad for prices and for security of supply.
The good news is that gasoline prices on average aren't at $5 anymore. In America, they're closer to $3.80. But over the last few weeks, Annmarie, they're starting to break high just a little bit. When you think about the options available to the administration, can they lean on the SPR a little bit more? What are the options available?
Well, Jonathan, just quickly, not only are prices on average across the U.S. are starting to break a little bit higher, but if you look at pockets of the country, Oregon, California, you have much higher prices, like $5 a gallon in some places in California, which is why you see Representative Ro Khanna really go after Saudi Arabia on Twitter recently. So what the U.S. potentially has is JP Morgan analysts say they can use the SPR. Halima Croft, in her postcard from Vienna last night, talked about the fact that Ron Klain seemingly said that they can use the SPR to offset the OPEC production cuts. But she's not expecting a big blockbuster use of the SPR, but potentially this could be one of the tools in the toolbox, as what Julian is saying, that the Department of Energy is also looking into potentially what it would mean if they were to have these export controls on gasoline and refined products.